Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Dear readers, it's been quite a volatile month for global stock markets and Indian indices. Russia-Ukraine crisis, inflationary pressures, Fed turning hawkish, and RBI considering rate hikes. All these are negative for stock market sentiments in the short term, and there is no knowing when these factors will turn around or whether they could lead to a spillover to create new disruptions on the macroeconomic front. Now, I'm not saying all this to scare you. As I've already shared in my previous videos, I'm bullish on Indian markets and economy in the long term. Yes, markets could face further corrections in the short term, but that's for traders to obsess over. As Graham says, in the short run, the market is a voting machine, but in the long run, it's a weighing machine. For long term investors, any corrections that happen in the market would be an opportunity to enter quality stocks at attractive prices. So, what are attractive prices and who decides what is an attractive level for the stocks? Parameters such as return on equity, debt to equity, consistency in the profit margins, cash conversion cycle, pledging, growth in the business, management quality, cash flow comparisons with earnings, and historical and current valuations are some of the tools that the fundamental and bottom up focused analysts like me use to assess the quality of the business and a reasonable buying price for the stock. We all work with the information publicly available to us about the businesses and try to connect the dots to get some sense of what future could look like for the businesses. We work with imperfect and limited information available to us, multiple variables that could influence the business, and sometimes unexpected variables like COVID and lockdowns get thrown into the equation, appending all the analysis. This does not guarantee 100% success, but if the process and allocation are right, there is a high chance of beating benchmark index returns by a wide margin. There are well experienced fundamental analysts who use the same methods, are earnest, and yet could end up arriving at different target prices. Sometimes the same stock may be given a buy view by one analyst and sell by another based on their deductions from the same information. So, who you can count on, especially in volatile times like this? Well, if you have done the basic analysis, I'm going to talk about someone who could help you polish your stock picking process. You get to know not just the names of the stocks to buy, but also a sense of the price at which it would make sense to buy. That person is none other than the management or the promoter of the business. Unlike tips that you come across on social media that could be just a front running exercise, promoter is invested in the business for the long haul. And hence, keeping a track of what they do with the stocks of their companies they own could give you interesting insights about the businesses in your watch list. Peter Lynch has said, insiders might sell their shares for any number of reasons, but they buy them for only one. They think the stock price will rise. Of all the stakeholders, it is the promoters who know the most about their businesses and future potential. If they are willing to part with their personal money to buy stocks from the open market, there is a good possibility that they believe that the stock is undervalued and will potentially witness gains in the future. The good news is you could access this data for free on BSE website. In the next few minutes, I'll show you how and will share the names of the stocks where insider buying has happened and where I believe the fundamentals are good to keep them on watch list and dig deeper. To begin with, click on the tab Corporates on BSE website. On the slide, this is encircled and marked by an arrow. This will take you to a page as shown on the next slide. Next, click on Insider Trading Updates tab. This is again marked on the slide for your reference. This will take you to the latest insider trading updates related to buying and selling of shares, pledging and release of pledging, etc. by all the insiders, including key management personnel, promoters, employees in the company, and so on. The website allows a maximum of 3 months. For this video, I have chosen a period of 3 months from 18th Feb to 18th May. Depending on the frequency at which you do this exercise, you could choose a different interval. The maximum that website allows is 3 months. After that, I would recommend you to download this data in the Excel. This option is available at the top right and is marked by a red circle in the slide. Excel will allow you to sort the data in multiple ways by using data filters. Since we are interested in knowing the names where promoters have increased the stake, under Mode of Acquisition tab, that is column Q on the slide, I have selected Market Purchase and Market Sale. I have used both since we want to consider companies where promoters are not engaging in frequent buying and selling, but consistently buying the stock to increase the skin in the game for the long term. If you further arrange the securities alphabetically, you will be able to clearly see this pattern or the lack of it. Similarly, we can put more filters. Column C could be used to select the category of insiders whose buying activity we want to track. Here I have selected director, KMP, promoter, and promoter group. Under column D, you could select the category of equity and equity shares. If you divide column I by column H, that is the value of total transactions on a specific day divided by number of shares bought or sold, you will get the specific price at which the promoter has bought or sold the stock on that particular day. You could add this column in the Excel yourself and compare that with the current stock price. Now, when the markets are in a volatile or correction phase, and if you have done the basic research, there is a good chance that you will end up owning a stake in the business at a better price than promoters and owners. I would recommend you to focus on stocks with a market cap of rupees 3 billion or more to avoid shady or low liquidity companies. In the next slide, we will see the list of stocks which have caught my interest and I would like to keep in my watch list. The stocks that look good on financial parameters and are currently trading at a discount to average insider buy price include Alchem Laboratories, Apotex Industries, Bajaj Healthcare, Bhansali Engineering Polymers, CCL Products, Deepak Nitrite, Globus Spirits, Greenply, HCL Tech. International Conveys, Kanchi Karpuram, Quality Pharma, Metropolis Healthcare, and Shakti Farms. Please note that this list does not reflect my view on the stock. It's the starting point and should be followed by deeper analysis. Some of these stocks could be cyclical in nature, and once you buy, you should be mindful of the right exit levels too. Now, let me know if you found this information useful. If you do press the like button and share your comments. For more such updates, subscribe to Equitymaster YouTube video channel. Thank you for watching. Goodbye.